Okay, for lecture 3, I'd like to talk about opening types. And there's 4 different opening types. There's an open auction open, and that open usually opens up within the prior day's value area. It tends to be choppy, crossing through the current day's open many times before price moves away from the opening price. The point here is to realize you've got a choppy open, the market's indecisive, it's a low confidence market, large players aren't in the market yet, and you might want to trade some of the later rotations. The opening rotation, the A rotation, is pretty choppy, so we don't necessarily want to trade that. We want to wait a little bit until we can get a break, maybe B or C rotation. Okay? A second type of opening is the opening test drive. And the opening test drive can, open up within the prior day's range, or a little above it or below it. And the point here is that the opening test drive, it moves to test a valid market profile point, a high or a low, a value area high, a value area low, a point of control, or something like that. And then it either tests it and it holds, or it rejects it and turns around. I'm going to show you some of these, here in a minute. The open rejection reversal just opens up just way far away from the prior day's area of value, and it's rejected by the market as, a type of being an unfair high, or the market's too far away from its value area, or it's an unfair low, or something like that. And I'll show you one of those in a minute. And then you have just an opening drive where, the market, it just opens up and goes in one direction for the rest of the day. And that's considered a very high confidence market. The strength of that open, it shows that there's large traders that have decided to move the value of the market higher, before the market even opened. I mean, that's it. They've got their orders placed, the market opens up, and it goes in one direction for the entire day. So let's go ahead and take a look at some of these. Here's a great shot of an opening drive. And you can see here the market opens up in range, in value, and the A period is very long. And the market continues up in one direction for the rest of the day. So this is a great example of an opening drive. That's it. There's the open. It back ticks 3 ticks, and it just goes. So that would be something you'd want to get on early in the trade by recognizing the type of open it is. You'd want to just get in or as early as you can and take it for as far as you can. And that's a great shot of an opening drive. And there's very little pullback, not a lot of retrace. It's just, this is strong. Market participants have decided to move the value of the market higher that day. Just a great example of that. And then here's a nice example of an open rejection reversal. Now here's the prior day, and the market opens up, about 13, 14, 15 points above value, and it just gets rejected and sells off for the rest of the day. So that's an open rejection reversal. It's you've got a what's called a sloppy profile here. There's not really a good Gaussian distribution like you would see here. You don't have a strong development of value area. And so as price opens up higher, it just gets rejected, and it says, look, I've got to come in here and trade in this prior day's value area and make a Gaussian distribution. It's basically profile repair. You've got a sloppy profile. Price moves back down into it to clean up the profile and finish trading all the orders that have been placed at those areas. Okay. Now the other ones I'm just going to have to explain, and I'm going to use just this profile as an example, and say what if. So let's say, for example, price opened up within this day's value area. Okay. So if price opens up within this value area, it would be considered a low confidence market. You really hadn't moved much in the overnight session. Traders haven't really decided which way to go. The market's indecisive. You don't have large players on there. And the rule of thumb is when if you see the location of the current day's open within the prior day's value area, you're probably going to get an open auction open, meaning it's going to chop through the open a lot of times. And you just want to trade late and maybe wait for different rotations, maybe like sometimes it'll break out on the B or C rotation and like that. So by recognizing the location in the open in relationship to the prior day's profile, can keep you out of bad trades, So for, like here, when we had this opening drive, you opened up in range above value, and once it broke today's high and you had such a strong open, it's a long. Had it opened up in here in the prior day's value area, you're probably not looking to trade too early. So that would be an indication of an open auction open. So let's talk about the opening test drive now. An opening test drive, let's say the market opened up here, in range or a little above range, and it went up to this day's value area high, and it couldn't break through. So that would be an opening test drive. It would test a valid market profile test point, and it would get rejected. And a valid market profile test point is the prior day's high or low, value area high, value area low, whatever. As you can see an example here, there's what's happening is what's called an 80% trade. And you can see here the market opened up in value in range of this profile, this day's profile, pretty sloppy profile. And 80% of the time, if you have the first two 30-minute periods are inside the prior day's value area, that value area will fill in. And you can see here, on this second day up, it absolutely did that. And it repaired the profile. Okay? And let's go on to say, let's use this profile again and say, all right, the market opened up in range below value, and the market came down and tested the prior day's low, and the prior day's low held, and then the market would go up. That would be another example of an opening test drive. The market would open up and it would test or reject a valid market profile test point. And the best way to judge these things is to look at the location of the current day's open in relationship to the prior day's profile, and that will give you, it's areas where the market is going to test, and you're testing the prior day's high, low, value area or something like that. So the current day's open, the location of the current day's open can give you an inclination into what type of opening you're going to have. So those are 4 type of openings to take a look at. And here's just a read. Here's your open, A period, moves up a little bit, comes back down, gets into the prior day's value area, and doesn't want to fill. And then once your B period gets over this value area, obviously you get along. This is the importance of assessing the type of opening you're having for that day, which can help you get on trades early or stay out of bad trades. So that's, I can't stress the importance of the current day's open in relationship to the prior day's profile. So hopefully that'll give you some insight into the types of openings that there are using the market profile graphic.